Hey everyone, and welcome back to the channel. Today, we're tackling a massive question that I get all the time. Where should I put my money? We're going to break down 3 popular options: ETFs, stocks, and crypto. By the end of this video, you'll have a much clearer idea of what they are, how they work, and which one might be right for you. And don't worry, we're keeping it simple, no confusing jargon, just straight talk. Let us imagine you're at a massive farmer's market in 2026. This market represents the entire world of investing. First up, let's talk about stocks. Buying a stock is like buying a single, perfect-looking tomato from one specific farmer at the market. Let's say you buy a share of a company like Tesla. You now own a tiny piece of Tesla. If Tesla does really well, makes amazing cars, and their profits go up, the value of your tomato or your stock also goes up. You could sell it for more than you paid. But if that farmer has a bad year, maybe a crop failure or some bad press, the value of that specific tomato could drop. You might have to sell it for less, or it could even go bad completely. That's the essence of stock investing. You're betting on the success of one single company. The potential for high rewards is there, but so is the risk of losing your investment if that company struggles. It requires research. You need to know about the farmer, their soil, their history, and their future plans. For a company, this means understanding their financial health, their leadership, and their industry. Now, let's move on to ETFs. ETF stands for Exchange Traded Fund. Back to our farmer's market. Instead of picking just one tomato from one farmer, imagine buying a pre-packaged basket. This basket is curated by the market manager. One basket might have a little bit of everything from the whole market: tomatoes, cucumbers, lettuce, carrots, from all the different farmers. This is like a broad market ETF, such as one that tracks the S&P 500. You're not just invested in one company. You're invested in the 500 largest companies in the US. This is diversification. It automatically spreads your risk. There are also themed baskets. Maybe you want a basket that only has organic produce. That's like a sector-specific ETF. For example, one that focuses only on technology companies or clean energy companies. The beauty of ETFs is that they offer instant diversification. You're not putting all your eggs or tomatoes in one basket. For most beginners, this is a fantastic place to start. It is a lower risk way to get exposure to the stock market's growth over the long term. You're betting on the overall health of the market or a specific sector, not just one single company's fate. Whether you're in the US, Canada, or Europe, there are ETFs that track your local markets, like the TSX in Canada or the Euro Stoxx 50 in Europe, as well as global ones. Alright, now for the wild card, cryptocurrency. Let's go back to our market. Imagine in a corner of the market, there's a new, exotic fruit that nobody's ever seen before. Let's call it a digifruit. Some people are saying it's the food of the future, that it will change everything. Early buyers who got it for cheap are now selling it for a fortune. There's a huge buzz around it. This is like crypto, such as Bitcoin or Ethereum. It's a digital or virtual currency secured by cryptography, which makes it nearly impossible to counterfeit. It's decentralized, meaning it's not controlled by any government or bank, which is a big part of its appeal for many. The price of this digifruit is incredibly volatile. One day, a famous chef might rave about it, and the price skyrockets. The next day, a report might come out saying it has a weird side effect, and the price plummets. This is the world of crypto. The potential for astronomical gains is very real. We've all seen the stories. But the potential for massive losses is just as real. Unlike stocks, you're not buying a piece of a company that produces something and has profits. The value of most cryptocurrencies is driven purely by supply and demand, by public sentiment, and by its perceived future utility. It is a bit like betting on a brand new technology before it has been widely adopted. It could become the next internet, or it could fade away. It's the highest risk, highest potential reward category of the three we're discussing. So let's put it all together. What's the right choice for you? It really depends on your goals, your timeline, and your tolerance for risk. Think of it as building a meal from your market hall. ETFs are like your main course, your foundation. For most people, especially those investing for long-term goals like retirement, a large portion of your portfolio could be in broad market ETFs. It's the sensible, diversified, set it and forget it approach. You're betting on the long-term growth of the economy as a whole. It's the slow and steady way to build wealth. Stocks are like your side dishes. This is where you can add some specific flavors. If you've done your research and you really believe in a specific company, maybe you've used their products for years and love them, you could add some individual stocks to your portfolio. This allows you to potentially get higher returns than the general market if you pick correctly. But remember, it comes with higher risk, so it should probably be a smaller part of your overall investment plan than your core ETF holdings. And crypto is like the spicy, exotic seasoning. A very small sprinkle can add a lot of excitement and potential kick to your meal. But if you add too much, you could ruin the whole dish. For most people, if you choose to invest in crypto, it should be a very small percentage of your portfolio. And it must be money you are fully prepared to lose. Don't ever invest your rent money or your emergency fund into something this volatile. Think of it as speculative. It's a high-risk bet on a future technology. By 2026 and beyond, the integration of these assets will be even more seamless. We're seeing financial apps that let you hold ETFs, fractional shares of stocks, and crypto all in one place. This makes building a diversified portfolio easier than ever. The key takeaway is diversification and knowing your own risk tolerance. Do and feel pressured by stories of people getting rich overnight on a single stock or a crypto coin. For every one of those stories, there are thousands of people who lost money. The most reliable path to financial wellness is consistent, diversified investing over the long term. Start with the foundation, the ETFs. Then, if you're comfortable and have done your homework, you can sprinkle in some individual stocks. And only if you have a high risk tolerance and money you can afford to lose, consider a tiny allocation to the crypto space. This isn't financial advice, but a framework to help you think about these options. The best thing you can do is start learning, and the second best thing is to start small. You don't need thousands of dollars to begin. You can buy fractional shares of ETFs or stocks for as little as a few dollars. The important thing is to get started and build a habit. I hope this breakdown of ETFs, stocks, and crypto was helpful. We turned a complex topic into a simple trip to the farmer's market. Which one are you most interested in? Let me know in the comments below. And if you found this video valuable, please give it a thumbs up. It really helps the channel. Do and forget to subscribe and hit that notification bell so you don't miss our future deep dives into building wealth. Thanks for watching, and I'll see you in the next video.